Could you be making a $12,000 tax mistake like Toni, a wedding photographer who nearly lost her business over a $12,000 tax mistake? Today, we're diving into the deductions that could save your business thousands and the ones that could put you in the IRS's crosshairs. And stay tuned to the end because we get a surprising statistic straight from the Internal Revenue Service data service thing.
In a world where chaos seems to reign supreme, where uncertainty lurks around every corner, and financial markets are now more unpredictable than ever, there's one place you can turn to find clarity and control. Welcome to the Wealth Wisdom Financial Podcast.
Hey, I'm Brandon.
And I'm Amanda.
Join us as we dive deep in the world of personal and business finance
to assist you in navigating through the chaos and building the financial future you deserve.
We believe when conventional financial thinking doesn't get you where you want to go,
you need wealth wisdom.
So if you're ready to take control of your financial destiny,
tune in to the Wealth Wisdom Financial Podcast.
Because in a chaotic world, your money shouldn't be.
Subscribe now and never miss an episode.
So before we dive in, let me tell you about Toni. They run a successful wedding photography business, making around $80,000 a year. They thought they were doing everything right with their taxes, claiming their cameras, gear, their editing software, and their home office. Yet they got an audit letter from the IRS.
Dun, dun, dun. With this audit letter, the IRS said they were going to question 3 years of tax returns. Why? Because Toni had claimed 100% business use of their home office, the same office where their kids do their homework and where they did their personal photo editing as well. They also deducted their clothing because, quote, they were only worn at weddings, and every meal they ate while editing photos. The result? $12,000 in back taxes plus penalties and interest. Toni nearly lost their business paying it all back.
So here's what most business owners don't realize. The most expensive tax mistakes aren't usually from missing the big obvious deductions. They come from either missing lots of small legitimate deductions or something along those lines.
Yeah, because those small legitimate deductions seem too simple to count. Or maybe it's because people claim all these questionable deductions because everyone does it.
Yep.
Toni's story isn't unique. We hear similar ones all the time. Let's make sure your business doesn't become one of them.
Yeah, again, we're recording this episode because we hear this all the time.
So we're going to start with some commonly missed deductions, ones that could have helped Toni actually offset their tax bill. And then we're going to jump into some deductions that got Toni in trouble and could get you in trouble too.
Now, before we jump in, a quick reminder, we are not tax professionals. I mean, we've filed taxes, we've done all of our stuff. We are financial professionals, so we see a lot of things. And so I do think the interconnection of finance, making money in the business and keeping it, and taxes really matters. And so that's why we want to talk about it, because you don't want to just have your tax guy say, how do I run my business? Or how do I grow this, but understanding both sides. This episode is going to empower you with knowledge and ideas to bring to your tax professional. And again, we're not giving individual tax advice, so don't try and put me in that box. But we want to give you some really good benefits in what I think could really impact you.
Okay, so let's start with some legitimate deductions. Maybe an obvious one, but we're stating any kind of bank fees, merchant processing fees, credit card processing fee from client payments, monthly maintenance fees, wire transfer fees, even ATM fees for business withdrawals. The key is you have to have a separate account. Something Toni learned the hard way. If you're mixing and mingling personal and business, a lot of those fees you don't get to deduct anymore. So if you separate accounts, keep everything separate, you're doing that right, then you can make sure you're maximizing these fees and getting deductions for them.
Makes it also challenging when you're doing financial audit to figure out who's where, makes it a lot more difficult.
Yeah. Another deduction a lot of people use is car expenses. But don't forget, beyond the mileage, most people know about mileage deductions, but you can also deduct parking fees for client meetings, tolls on business trips, car washes if you use your vehicle for client meetings. Perfect for those wedding photographers like Toni or the real estate agent, right? Keep those receipts separate from your personal car expenses, of course.
Now there's also the getting started cost from before you officially opened. Market research expenses, training and certificates, business plan consulting. These are often forgotten because they came from personal accounts before the business actually existed.
So while you got everything separate now, think about before you had it separate, what might you need to make sure you're accounting for? And make sure you got all the documentation for that and everything too. So those are legitimate things. Now let's talk about some deductions that got Toni in trouble, often because people claim them but shouldn't.
Yeah. Again, we see these often.
Yeah.
There's the home office myth. How many times have we watched videos on this? Right? I mean, I see it a lot. So there's the home office myth. Tell us about that, Amanda.
The big thing is you need a space that's used exclusively for business. This means no guest bed in the corner, no personal desk items, no kids doing their homework after hours. This is one of Toni's biggest mistakes, mixing business and personal use. Now, that being said, if an IRS agent does show up at your house looking to inspect your home office, I hope you'll do what my tax pro told me to do. Unless they have a search warrant, which IRS agents don't really get search warrants, you can say no. Give them your tax pro's contact information and that's it. Don't say anything more. Don't offer them a cup of tea on your living room and tell them your life story. Just say no and give them your tax pro's professionals. This is why tax professionals are worth some of their cost. With the right credentials, they are able to represent you in front of the IRS so that you only need to talk to the IRS agent with your tax pro present and only as needed. So follow all the rules for the home office myth. Don't fall into the home office myth. Follow the rules exclusively for business, nothing else there. But also don't let an IRS agent inspect it unless they've got a warrant and your tax pro's present and all those things.
And watch Young Sheldon. I think he had some episodes on being audited himself, right?
Oh, that was a great episode from Young Sheldon. The second one that got Toni into trouble is the business clothing trap. You can't have the business pay for your clothes unless it's a required uniform or protective gear. Looking professional isn't enough.
So I can't do that with these?
No. Even if you only wear it for work, it doesn't count. If you could wear it elsewhere, it's probably not deductible. Just like you can't put a logo on your car and then deduct every single car expense, you can't simply put a logo on a polo to get a tax deduction. So for Toni, those wedding only outfits, not deductible, as Toni discovered.
Yeah, that's again one of those things that I've seen. And then there's the business meal mistake. I mean, this is again another one that they're like, I'm gonna just put it on the account and deduct it. Eating alone at your desk isn't a business meal. I know you're thinking, why is he saying that? Because people have done it. Eating alone at your desk isn't a business meal.
Working through lunch doesn't make it deductible. You need documented business purpose and who you met with, which must include some kind of business discussion, not just networking. Now, I looked into some of the really nerdy case law and case notes about people getting in trouble with the Internal Revenue Service, specifically for this meal mistake. And the IRS has this business expense substantiation requirement, which is a fancy way of saying you need documentation of the meeting purpose at the time of the meeting and what was discussed, who was there, all the things. Doesn't mean you need formal meeting minutes, but you know how people keep like a journal in their car to write down their mileage and different car expenses, put their receipts in there, or they have an app that tracks it. You could have something like that for your meetings too. When you have a meeting, you keep a meeting log. What was the purpose of the meeting? What was discussed there? Who was there? That's a great idea to make sure any business meals have this business expense substantiation tied to them. Toni learned that editing photos while eating doesn't make your lunch deductible. Now, you might be thinking, but everybody else is doing these things. We're going to address that when we get after the break.
Ready to take the next step towards securing your financial future? Whether you're planning for retirement, saving for your dream home, or you just want to make your money work harder for you, the team at Wealth Wisdom Financial are ready to assist you. And now, it's easier than ever to see how we might give you a boost on your financial journey.
Schedule a 15-minute discovery call with one of us today.
And let's discuss your questions and your financial goals together.
Don't wait any longer. Your financial freedom awaits. Schedule your discovery call at www.wealthwisdomfp.com/call.
So I get to hear this from Amanda all the time. Also, whenever I'm thinking about it, she is very to the book, right? And I'm like, well, other people are doing it, and she's like, yeah, but we need to follow the rules. And so this is where having that on your team is really important, because otherwise I don't want to go to jail, and neither should you.
So if you're thinking, but my friend's accountant lets them deduct all those things, that's exactly what Toni thought too. Their friend's accountant was more aggressive with deductions. But when the audit came, the friend's accountant wasn't the one on the hook for the penalties. So while your tax pro can represent you before the IRS that we talked about earlier, you're still the one that's accountable for signing your tax return and all the numbers listed there. In other words, you're the one that pays the fees and the penalties and could potentially go to jail, not your tax pro in most cases.
And make sure you have an Amanda on your team that can help make sure you do all those things.
Now, at the risk of sounding like a nagging parent and somebody that's way too risk averse, we want you to remember one thing. Just because someone else does it doesn't mean you should do it, right? Just because they've done it and haven't gotten caught doesn't make it legal.
Yeah.
In fact, I found this chart. We're going to put it on the screen on the video. I'll try to put a link to it in the show notes if you're listening to the podcast version. This chart of cases closed by the Internal Revenue Service in fiscal year 2023. This comes from the Internal Revenue Service data book, the 2023 version, it's the latest I could find. A huge portion of the cases that they brought and closed were against small businesses and self-employed. It's actually about 45,000 cases they brought in 2023 against small businesses and the self-employed. Compare that with only 2,495 cases that were closed against large businesses and international.
So
huge difference there.
So they can make a lot more money from the big guys.
But the big guys have, like, we're purely speculating now, but the big guys also can pay attorneys way more than the Internal Revenue Service agent is being paid or their legal representation. And so, like, yeah, they're definitely going after small businesses and the self-employed way more and bringing more cases, and maybe because we make more mistakes too.
Yeah, I mean, I would say we don't have the tools, or we make more mistakes. We watch some video on YouTube on how to deduct all of our meals, and then we end up in trouble, right?
Yeah. So the goal here is not to make you afraid, although maybe a little fear is good because it gives you bravery to do some things that you probably should be doing. But the goal here is two parts. One, don't get in the IRS crosshairs. No one wants to be on the wrong side of the Internal Revenue Service. And two, not to claim every possible deduction, but to only claim the legitimate deductions you're entitled to, which there are plenty of them. You're going to be okay. Now, Toni's business survived. It took about 2 years to recover from that audit. And today they're thriving with proper bookkeeping and legitimate deductions. Smart tax planning is all about building sustainable, audit-resistant businesses, not about pushing the envelope until it tears.
And another side note is when you owe the IRS money, if it's back taxes or anything, they are not very lenient typically, and the interests are really high. So that's another reason that's where people, when they get into those challenges, it puts them back even further because of those challenges.
Yeah. So, and they charge all the fees and interest up front. So even paying it off more quickly is not going to help you. So do you want to make sure you're not missing any legitimate deductions while avoiding Toni's mistakes? You're in good hands here. We've created a small business deduction checker. It's a simple tool to help you identify deductions you might be missing while avoiding the risky ones. And it's something you could have fun with, get some knowledge about, and then bring to your tax professional to help make sure you're taking those deductions, talk to your bookkeeper, make sure everything's being coordinated, all those kind of things. You can get it in the Wealth Wisdom financial community at wealthwisdomfp.com/community. And join today. We got an entire library of resources. Again, that's wealthwisdomfp.com/community.
Yeah, it sounds like, Amanda, you love checklists and little cheat sheets and all that stuff.
I do.
Not cheating on your taxes,
Nope.
but other ways.
Simplifying the process,
Yeah.
which actually, so hit subscribe. I'm going to give you a super simple, easy way to make all this happen in next week's episode.
Oh, so there we go. So don't forget, go to that website and download those special tools. There's a bunch of them there at our community, wealthwisdomfp.com/community. Thanks for joining. I always say this, don't forget, hit that subscribe button and live long and profit. And leave us a review. We'd love that. Love to hear your comments. Love to hear what you have to say. If you think we're crazy or whatever. Well, don't tell us that, but
we are a little crazy.
Yeah. We're talking about taxes. Who is, I don't know, not crazy if you are.
Yeah, and thanks for listening all the way here to the end.
The topics presented in this podcast for general information only and not for the purpose of providing legal, accounting, tax, or investment advice. On such matters, please consult a professional who knows your specific situation and make sure they help you not go to jail.
Or pay a bunch of fees.
Or pay a bunch of fees.